started the recording and
Thanks.
take it away.
All right. Hello, Andy. I'm joined by Andy here as usual.
Hey, Steve. Hi, Scott. And hello, friends.
Hello, friends. A lot of regulars in here. See some weekly names, but of course we also have others in here. So we're going to go through the slides as always, so everybody gets the same dose. Starting off with the disclaimer dose. Just a reminder here, we're doing a webinar, which is the trade of the week, and we're content publishers. We're a software as a service. A subscription service. So what we're not is registered investment advisors or Series 63(7) brokers, what have you. So if you need investment advice, you got to seek out the registered guys, because we're just commentating here. So reminder that this platform is almost 15 years old, pretty much as it stands now, and I've been with them since the beginning. So is Andy, one of the original beta testers. And we take for granted sometimes that we have the in-depth knowledge that others don't. 15 years of using this program makes it kind of easy, but when you're first joining, we recognize that 3 or 4 days is not really enough time. It takes a couple weeks to really get up to speed. So some of the items that we have here to help people get up to speed and shorten that learning curve is definitely the live trading room. Every day Barry's in there with 500 people or so observing or participating, learning, lurking, contributing, whatever they want to do, but Barry shares his live desktop with everybody and shows off the features of trade ideas. And so if you have a question and you want a demonstration, a lot of times in our support on the website, Barry reminds us, hey, send them into my live room. I'm here and I'm demonstrating. So go in there and don't feel bad about asking questions, because Barry's very, very generous with his time, and it's a great way to learn. And the best thing is it's free. There's a lot of chat rooms and live trading rooms that rival Barry's, and they're charging $80 a month. So there's really no reason why you're not in there. You shouldn't be in there if you're trying to learn more, and especially learn about the program. All right, so there's that. And then there's the afternoon webinars, like we're talking with you right now. The afternoon webinars, yesterday I missed out. I was on the road coming back from a short vacation, but Jamie took care of things. Today we do the trade of the week every Tuesday. Tomorrow, typically, if there's no guest webinars, Dan and Brad will speak to you about upcoming features and things like that. And then Thursday, Andy and Jamie kind of take a look at the wrap up of the day and put some content together. It's always timely and useful on Thursdays, but there's no afternoon webinars on Fridays. So we have a morning session where we're kind of like Barry. You can come in and have a much smaller group, and we'll demonstrate our desktop like we're doing right now with GoToWebinar, and you got 3 hours of open support to just come in and ask questions, and we can demonstrate for you live. There's 4 of us in there, so if one of us can't figure out, sometimes the other 3 can figure out a question if you're looking to do something, or maybe put together a scan to see if that's possible or not using our platform. And then lastly, I didn't scan the last slide. I saved it for this slide. It's just a breakdown of the another way in which we're making ourselves available to you all. The TI University. See, we used to do a free one-on-one session, and with the last couple of years with the explosive growth that we've had here, it's just not really feasible for many reasons. It's not efficient enough for us to do one-on-one 1 hours. So we have a handful, a dozen or 2 people that come in to take these live courses, and we do it in group sessions now. And the group sessions are broken down in 4 days, Monday through Thursday, and then it starts over each Monday. And the basic stuff on Monday, Sean kind of gives everybody a heads up and a good direction to go, and then a few less people kind of show up to the 201 class that I do on Tuesdays. And then by the time we get to the end of the week, you got the handful of the diehard guys that really want to learn back testing and a deep dive into the advanced features of trade ideas. So the TI University repeats every week. It's live. It's not evergreened. We're available to you, and we can communicate just like we're doing now. All right, so that brings us to really the content, the theme, which again is always going to be man and machine combined, humans and machines. This is the brave new world that we're all going to be walking into. So, if you're somebody who has a second job as a data analyst, whether it's in the insurance actuary tables or the financial markets or sports or whatever, if you're somebody who's parsing through big spreadsheets worth of data, I would be brushing up and tightening up your resume, so to speak, because you're probably going to find that the AI machines are taking over the big data sets. Now, that doesn't mean the humans are going to be bumped out completely. They're just going to free us up to do other things, but there are still going to be a human element going forward in our new future where the data sets that are presented to us by the AI are there for us, the human beings, to pilfer through and make our final discretionary decisions. And that is a great dovetail again to what we do at Trade Ideas. Whether you're using your own custom scans that you've created or you're using the assistance of our AI to see, is the direction today long or is the direction today short? There's other things, there's many things you can glean from our AI tool as well from just individual trades. So that's the theme, and I'm sticking to it. I'm just reading your comment there. If I were Raquel Welch, which I am one-on-one, absolutely mandatory. If I were Raquel Welch, if you were Raquel Welch, friend, I would make time for you. All right, so today's agenda, kind of following the similar format that we've had the last few weeks. We'll take a look at market recap. I'll show you in a moment. The NASDAQ is in clear sailing all-time highs, and the S&P is coming real close. And that's going to be the headline on the news if and when the S&Ps approach and take that up. But we'll take a look at that in a second. We'll go over the Holly recap trades of the day. The trade of the week was kind of interesting. Some thoughts on that. Going to look at, of course, at the sectors again. It's always nice to see what might be in play for tomorrow to put on your radar. And then we'll look at last week's alerts. I've got some thoughts on that. Kind of interesting the way they behaved. And then I've got a new set of ideas that I've been curating. I think getting some good feedback on that. I think people always like ideas. And so I'll act as the quote unquote AI and curate a few ideas for you and we can mark them up together. So that said, let me grab my pen. Oops, let me expand my window first. I'll grab my pen. Starting as always on the S&P. Hindsight, of course, is 2020, but we've talked a lot about the way the market has just managed to grind its way through all of these interesting levels of resistance. And of course, the golden cross back here, which was almost a month ago, now just solidly confirming that we are moving higher. So very interesting backdrop. We've been through a lot. Big bear market that lasted about 2 days, but that was about it. And since we grinded higher out of this orange line, we've been in this little gap in doji land. I've pretty much said there's just really no bear case to be made. And here we are a week later, the moving averages are perfectly fanned out. Price average is riding that 10-period moving average as we always talk about. And we zoom out a little bit, we got a chance to look at, let's just go ahead and set this actually, because I'm going to want to know when this happens. So a high of 293.95. 290, I missed that, 293.95. So now we have new all-time highs in the S&Ps. And we've talked a lot recently about, the price action being close enough to this level. We can now see how close we are after today's price action. We talked about price action being close enough to the neighborhood. It's going to knock on the door and say hi. It's just what price action does. It's going to have to come up there and test it. I'd be very surprised if we reverse tomorrow. But we talked about, needing a nice little pullback, a nice little, the longer we just ride out on this wedge without deep, severe, corrections, and a bit of a small correction last week, how much energy is going to be there when we get to those levels? I mean, look at these volume down here, very low compared to the volumes back here, and of course, way back here. So that's one thing that's going to be a consideration when the price action does get there. But the S&P 500 is the benchmark, and that's the one that's going to be the most talked about on the evening news when everybody comes home from work and turns on their TV. As it is, the S&P, the Qs, the NASDAQ have already made it through their respective all-time high. So there's your leadership, and that's the way the NASDAQ has kind of been acting all along for the last few months down here. It's been kind of leading the way higher. So true to form, it has found its way to all-time highs last week. Let's take a look at the action a little bit. It hit that level, bounced off it for a couple days, and then took it out again on Monday for the most part, and a complete confirmation and follow through, closing above with a nice green candle, and not bad volume, I might add, compared to yesterday. Yesterday being a light volume day coming off the Easter weekend. So NASDAQ could be foreshadowing dragging the rest of the indexes higher, which brings up a great point now to look at the Russell 2000. which we've talked about as being the lagger all along. We laughed about it, being an animal that couldn't quite get across this river here, and was the rest of the herd going to come back and try and rescue it, or is this thing going to finally follow the rest of the herd and get itself in gear? Because money managers can't sit back forever and look at the NASDAQ grinding higher and the S&P at an almost all-time high. Where's the alpha? Where's the meat? Where's the money on the bone? Well, it could be in the IWM, and I'll actually let you know, Andy knows this, but I did log into our retirement 401k account, which allows us to make changes on the fly effective the next day, and I went pretty heavy into the IWM today because I feel that this is where there could be some catch up and there could be some alpha. Quite honestly, I told you guys a couple months ago that I'd been much more into bonds, and the bonds are not really performing as well. And I said that the technical indicator I'm going to look at is the same one that the big guys look at. The 200-day moving average and the 50 above that's a big one, and we've given it a month now to sort itself out, and it doesn't seem like the price action is going to abate. So I had to go in and make an adjustment. So back to the IWM, I think there's a lot of possible upside energy. We'll talk a little bit more about that when we get into the sectors. And then, of course, I see a lot of people drawing just textbook perfect, inverted head and shoulders. That they're there for a reason, and people talk about them for a reason. Looking back in hindsight, it might be easy, but in the moment here, there's some meat on that bone, I think, in the S&P. And then lastly, the Dow has just been grinding higher with the rest of them. It's also getting close to its all-time high, and doing it with a bit more nice action. Meaning, I like the move forward and the pullback. The move forward rather than just the kind of grind higher on gaps and dojis like we've had in the S&P for a while. So that's pretty much all I'm seeing. The market is led, I'm sure Andy would agree, by the big FANG stocks. It seems like, the Facebooks and the Amazons. Amazon is just an unbelievably good looking chart heading back towards highs again. So yeah, that's all I'm seeing. Do you want to add anything?
Yeah, the Qs, go back to the Qs again. They are on their all-time high, correct?
Yeah, look, and they hit it just like we would expect. That's the level of resistance where the sellers jumped in, but it only took 2.5 days for the bulls to chew through that level, and today we get our confirmation that we are in clear skies here in the NASDAQ.
Exactly.
No bear case in sight.
Yep, no, that's true.
Oops.
Yeah, there's not a whole lot else to say, and yeah, more than likely, I think we'd all be surprised if the spies didn't go tested. But yeah, not a lot. I do like that we saw, a couple of green bars, especially today. That's good.
Yeah.
We're seeing maybe things will at least get some movement during the day instead of these overnight gaps that we saw so much of the last 3 weeks.
You mean as opposed to last week's trade of the week?
Exactly.
I already went back and counted. It's 8 out of 12 days where it's spinning dojis. That makes it difficult. That's great for investors if you just want to invest and open the newspaper and see where your account is. But if you're trying to swing trade and catch some movement, this kind of stuff makes you crazy.
Yeah, it does.
But nonetheless, it's moving higher. So
that's it.
All right. So that's all I've got really on the market recap. You want to talk about Holly? You got anything interesting over there?
Well, it's not a whole lot to talk about, but let me grab it and I'll do what I can here. Let's, there was definitely some action going on today. Not a big gap up in the spies. The Qs probably not a real gap up, so I can't really use that as an excuse. It was as far as Holly goes. I mean, she didn't do bad. I mean, about an hour into the day, she was up a lot more, but for some reason or another, the market pulled back just a hair, and a lot of the stocks came in with it. I will say this: there hasn't. We are definitely working on something, for some new stuff for Holly, and I'm not sure when it's going to be coming out, but I just want you guys to know that it's like anything that you have when it comes to strategies, guys. You got to stay on top of it all times, and you got to make changes. That's why so many These algos do not work in the market for very long, and they just continue to not work because people are not adjusting and adapting to whatever may be going on in the market that's making things difficult for their strategy. But I do want you to know that we are aware over the last 3 weeks, and let's face it, we talked about this over and over again up until really the last couple of days. It's been a very tough market, a lot of gap ups, always tough for Holly. I'm not making excuses. They were all green today on risk on, but just not a lot of alpha to be had when you break down the share size, the amount of shares for the percentage she was up. So it just nothing to write home about, I should say. I will kind of go through here, and I was kind of looking and seeing, asking myself, well, what is working today? And things I've noticed were like on support, things kind of in the lower end of maybe their daily, or at least pulling back on the daily time frame. And that one's not so much. Yeah, I take that back. It has been beaten up. There's one that worked. These top two risk-on performers in Holy Grail did pretty well. This ATOS, another one pulling back on the daily, had a little bounce. Let's move over to 2.0. And what do we have here? A couple at the top, 5-day bounces. So these are the kind of things that I'll garner, from Holly when she may be kind of wishy-washy. In other words, a lot of losses and a lot of profits. Try to find out what may be working. And I noticed today that a lot of the ones on top were kind of bouncers, 5-day bouncers, or on support on the daily time frame. Even this Mighty Mouse, this RTX, you can see there, kind of beaten up on the daily, and you got a nice little go pause go today. That was a nice percentage gainer, not bad. And let's check out Grail and see if we have the same tailwind. Sometimes this could be a bullish chart or a bearish chart. That one's more bearish, obviously, on the top part, but it has pulled back on maybe a 5-day time frame before it popped up. And this one right here, another one that is pulling back on the daily. So, it may be a and AMAT can be a kind of another data point we can look at to see. Here was AMAT breaking out 5 days ago in the queue, in the queues, but look what it's done over the last 4 days. Even though the queues really broke out today, the leaders have been the semis, but what happened today? They really didn't do a whole lot. They finished pretty much flat on the day. So it may, that's the kind of stuff, there's a lot of rotation in this market. So you may want to, like if you're trading Holly and you see some of these ones where there's kind of possibly a bouncer, a 5-day bounce on support on the daily chart and trying to get a bounce, you might want to take a look at those, guys. It seems like it was what was working today. So I'll be keeping an eye on those kind of setups for tomorrow as well. I mean, there's no need for me to break down, there was definitely some good trades in the risk on. There's a great one right there in that AVLR. But when you've had this many trades, obviously you're gonna have some real good ones, and you had some ones that weren't so good, some stop hits. But for the most part, when you see Holly doing this, try to find out what's working, and maybe stick to that and what you're comfortable with if you are trading Holly. But Steve, unless you have something to add, that's about it. For Holly, there's not a.
I don't, other than the dashboard, bigger picture today. For the first 2 hours, 3 hours, it was just showing solid directional bias to the upside. Sure. So if you're somebody who's got a notion that, oh, this is it, this is where we're going to start going short because of whatever reason you have, when you look over and see the statistical probable model of Holly giving you nothing but a direction of long, you got to ask yourself, well, do I really want to kind of go against the grain here? So I just like to remind people there are bigger picture notions to be taken away from the AI many times.
That's a very, very good point. And we've preached that over and over in here, and it's a good one to bring up today because probably 92 or 3% were probably longs today taken. So that's a very good point, Steve.
Well, I talk about the AI every day, every Tuesday, again in the mornings during the 201 class. And one of the examples I give is I say, okay, let's say you're trading. Maybe you got a couple Holly trades and you got a couple of your own trades. You're in AMAT or whatever, and all of a sudden it goes. and you're looking at it, and I'm going to use a risk on example now. The example of risk on being, hey, all the trades that Holly took, in total, if you add them all up and average them, they're doing better if you try and stay in them longer, meaning Holly was getting out of a lot of those trades early. So how can that translate into what you're doing? Well, let's say you're long a couple things in your account, your own discretion, something you saw, and it's having a good move, and all of a sudden you look down, there's that sweet profit. What we want to do is we want to take it and sweep that profit because we feel like a bird in the hand is better than two in the bush. Well, in trading, believe it or not, the two in the bush are better. You're never going to really break away from losing trades and creating that separation from winners and losers if you're constantly taking profits the moment you see them, because you're afraid they're going to disappear. And we're all wired to be afraid that that food or that nugget, that profit's going to disappear if we don't take it now. But in reality, we should be fearing that we're taking it too soon and we're leaving a lot more food on the table by doing that. So to tie it all together, if the AI is screaming risk on all day long, it's telling you that that's the order. And if you feel like you need to take profits on one of your trades, that might be the perfect opportunity for you to sell half to kind of satisfy that greed demon or fear demon, and then let the other half work, because that's what the AI is telling you. And I just want to remind people there are scenarios like that that you can use the bigger picture to your advantage.
Absolutely.
All right. Well, that's all I got on that.
All right. So I'll pass it over to you.
All right, Red Rover, pass it back. All right, so where we go from here on our little recap is the trade of the week, the banner of this webinar. So guys, I was actually out of town Thursday, Friday, Saturday, Sunday, but over the weekend I had my laptop with me, not my normal trading station, but had my laptop. And I got to tell you, this week it took me a good hour and a half just going through a lot of different ideas and finding reasons why they weren't that good. And then I forgot what scan it came up on. Oh, okay, it was on the pull back to the 20. Yes, that's in the email. I showed the scan that it came on. And I finally had started going through that scan, and I had a moment, kind of like that movie Elf, where they bring in the Peter Dinklage, the Ghost Rider, and he's sitting there now, and all yes, I saw synopsis on the 20-day pullback. And the reason I said yes to myself in the screen, this is the one, is that it was this right here. I mean, a couple things. You know, this is a really good looking chart, and it's a software publisher. Software has just been, we even talked about that last week. We talked about the software index sector looking really strong, but boy, when you see something like this, and if I could zoom out and you could just see this is all-time highs here. So these red candles, and the old washout, and let's really tie it all together. When do the washouts make the most sense to me? When they catch you on the open. And there it is right there. It's those damn algorithms. It's just how they work, guys. There's nothing we can do except recognize this type of action here and use it to our advantage, which is what I did, what we did this week in, oops, let me get back to my, so we took this little flush out. These stop runs, 9 times out of 10, they happen in the first 30 minutes of the market. So when we tie it all together now in the bigger picture, it was a perfect washout. Everybody's, all right, I'm going to set my stop right there at the low of this candle, textbook, blah, blah, blah. And what do you know? It just takes about 5 minutes of opening action where it washes you out, kicks you out to the curb, and says, thank you very much. And then when they close up like that, especially in an uptrend, and especially after 3 or 4 days of pullback, and especially in a software sector that's been doing very well, it was a yes moment. It was just a no-brainer after looking at probably 50 other things that just were eh. So I had good confidence on this one. Unfortunately, I was driving back home on Monday and didn't participate in any of this, so that's just the law of how it works. But it's working pretty good. No, I'm going to have to, is Vance here today? Let's take a look. Vance? No, I don't see Vance. Vance wrote me on Monday morning on the replying to the trade of the week, telling me why this looked like a great short and his theory on why this was going to happen. And I said, Vance, I'm sorry, but you know, we don't have theories here. We work on price action, and this is all I'm looking at, pure and simple, the price action. So needless to say, I haven't heard back from Vance. I think he got the picture. But there's no resistance here, guys. It's in blue sky, no man's land, just like the Qs are. And as I mentioned in the content of the email, it's up to you. You know, maybe if we get lucky, which it looks like so far, a decent volume bar, a nice breakout to all-time highs today. Love to see some follow through, but you know, take profits along the way while you can in quarter increments or third increments. And then the idea is maybe let that last third run. But eventually, if we have a good day tomorrow, then we got 3 nice green candles. It would be more than likely that it's going to settle down and pull back again. You know, 3 steps forward, 2 steps back. So it's all in how you want to time the jump rope. Again, back to AMAT. If you just want to be a position trader and hold it in your long-term account, then it's looking great. But the average, you know, daily action's not that great. But if you're just trying to time the jump rope and do swing scalping like we've talked about, turning a daily chart into a scalping kind of a chart, Andy and I call that swing scalping, or Andy calls it sway trading, I think. So, you know, if you haven't taken a little bit of profit, you might want to. Hopefully there'll be some follow through tomorrow, but there's no real upside target on this. And lastly, in the email as well, the last thing we want to do is see the price action trade back down into that reversal wick that we got, where we stopped all the weak hands out and we say, thank you very much. We'll use your misfortune as our opportunity. And the very next day, a little bit of a wick down there, but it didn't last long. You know, if we look back at the chart yesterday, it didn't last long. It was all in the open. It was a big head fake on the open. A lot of elbows were thrown, and you got to expect that, guys. The craziness happens in the first 15 minutes. So on the daily chart, it looked like it traded down, but it really didn't. And so from the get-go, this was really a good trade. Once you see these bottoming tail washouts, there's really no reason to see the price action come back down and visit this area of the candle. And if it does, you should be throwing up a red flag immediately and putting that trade on watch. So that was the idea behind it. Just, you know, looking for a 20-day pullback, and then when you see the 20-day pullback with that washout candle, that was the 5-star setup that I see. I just love those washout candles. And again, to reemphasize, they always usually happen on the open, and that to me is just as fine. If you think about it, people come home after 2 or 3 days of pullback and they look at this low back here and they say, well, if it takes that low out, I want out, but I got to go to my real job, so I'm going to log into E-Trade and put on a good till stop, market can't stop order, good till canceled, and you know, on their way to work, they don't even realize they're getting stopped out, and somebody else is, you know, the machines are taking their orders there. But by the end of the day, we can all set up and say, oh, that was unfortunate to you guys, but that's a good opportunity for us to get in. So that's the concept behind this. All right. Unless you want to add something.
No, it's great call.
Cool.
That's
all right.
Highs, right?
It is. Yeah. Let's just play with our new feature here. Time frame, monthly. Ta-da. It's had a good run, so you know. Time the jump rope, guys. I mean,
stick and move.
Stick and move, parry, thrust, retreat. You know, do what you got to do. But if we have some nice follow through tomorrow, I would expect people to take some profits and feed the troops, so to speak. All right. So from here, let's do this. Let's just go to quick sectors and kind of see. You know, when we do this, a lot of times something stands out. Maybe 2 or 3 sectors by the time we get to the end of it. And we can use that information for maybe things to keep an eye on tomorrow. So the banks led the way today. Obviously, they had the strong, but in the bigger picture, they're just still in kind of no man's land, not really seeing a whole lot there. IBB, horrible sell-off and back into the range. Nothing to like about that, except it's on the top of the board because of today only. All right, KRE, interesting. KBE and K, interesting. KRE, regional banks, and then national banks. They're getting a little divergence there, aren't they, Andy? The KRE doesn't look as strong as the national, so that's one to watch. KBE is one to watch, I think. Kind of flirting with this 200-day, and as you can see, the 200-day does seem to have a say in what's happening here.
Yeah, it does.
Yeah, I think so. That's pretty obvious there. All right, let's move on. So KBE for one. There's our software index. Hey, look at that all-time highs. Looks very much like Synopsys. Look, even with that wick on Friday. Isn't that cool?
Almost identical. Yeah.
And almost identical. How about that? But the play was back here, right when we called it on Friday. The play is not now. You could be Johnny come lately. You know, again, tomorrow, if we get any follow-through in Synopsys, it could be a half a day worth. So you don't want to be the late guy to the party. This one's, it's too late now. It's a good-looking confirmation of the trade of the week. This is no man's land for retail. So again, IWM, I'm going to say the same thing. This level right here is getting really interesting. And if it clears that level, I think it's going to be having a lot of catch up to do, possibly.
Mm-hmm.
We'll see. Because
Well,
small
instantly
caps
lagging
are,
in.
and Andy remembers these days, there are times when all of a sudden all the small caps just light up like crazy. And when they become in favor, boy, do they become in favor. And you can start picking off trades that move 15, 20% in one day when the small caps start popping. And that can be a lot of fun when that happens. But right now, we're not there. It could be the beginning of something, but if that technical level does get taken out, then that could get interesting. I'll have some more thoughts on that. There's the healthcare, which kind of fell out of bed. There was some news that was related. I don't really know, nor do I care. The chart looks like crap. So NASDAQ, we talked about that. This could be interesting. The IYR, I'm gonna add this to the list. A really nice slow pullback, a slow basing. The real estate REITs could be interesting. So IYR and KBE look kind of interesting. This is interesting in itself. It could try and break out, but it's solar. That's kind of a crazy, crazy sector. Nice trend there in technology. Oh, this is looking pretty good too. These are the some China stocks. Now, if you have some favorite China stocks you like to play, that looks really good actually.
Take a look at Baba. Baba, I was looking at Baba today. It looks good.
So looking good, and then loving this action right here. That little bird in the hand. Just kind of waiting for it to see what's going to happen. And Baba would be a component. Yep,
looking kind of setting up there for a move, possibly.
Stock. Home builders just trending. We're looking for things that aren't trending, or we're maybe thinking something that pulled back and is basing, or is just putting in a nice flag. Geez, the semis, you can't stop them. You're right. It's almost doing a horseshoe on the daily, gapping up, filling the gap, and then moving higher. That's extremely strong. Financials look a lot like the XHB, so I'm going to add that to the KBE and the financials. The banks and the financials look pretty good in China, and that's all I need. The jerk. Tray in this chair. Yes, XLF. Diamonds, we talked about, looks pretty good. Steel, yeah, kind of choppy, just pulling back, but nothing really exciting. Broker dealers look kind of interesting. I actually have a broker dealer in my next list of stock symbols we're going to set alerts on, so kind of like that as well. And here's where we get down to, as the stock market continues to blast off into new highs, the gold bugs start to lose their conviction. So we're having a lot of gold and silver stocks just fall out of bed here. And that brings me to TLT. Again, I talked a little bit earlier about changing the weighting in my 401k, but this seems like it's holding out. If the stocks continue to rip to new highs, money is going to be taken out of the treasuries and bonds, and money managers are going to start trying to chase performance and move money into stocks. So it's holding out the treasuries, but I don't think I have a whole lot of faith in it. Neither is the stock price action giving me interest. So to rehash, the sectors of interest tomorrow for sure are the financials. I'll add the semis to that. They could still move higher. The Chinese stock look interesting. Was there one I was missing?
KBE.
Oh, yeah, IYR looked interesting. The REITs, the nice pullback. The banks, the KBE, and also I thought there was one more. Oh, the possible broker dealers. All right, so 4 or 5 interesting sectors to keep on the radar for tomorrow. So let's move into last week's, and it's kind of interesting because all of them triggered, and a couple of them turned to shit, but the rest of them are still very much in play. I mean, there's the trade of the week. We've already talked about that. So these were the ones that we set last week. All right, CPBO triggered, but it's still grinding higher. Doesn't look bad. There's no reason to get out of that. Marriott, grinding higher. It did poke up a little bit and pull back a little bit, but don't have a lot to say about that one. I could see somebody getting out of that if they didn't like that candle. But this one, they all triggered very early, but they've just been going sideways is what I'm getting at, guys. They triggered and went sideways, and that's really no reason to get out. They're just still kind of working. Another trigger and sideways. I want to show you one more, though. I still think that MU, we talked about the possible semiconductors. You talk about a lagger. If you thought AMAT was lagging, MU certainly is lagging. This one, there's no reason to get out. It triggered, and we're just a few cents below. Now, then we get down to, I definitely don't recommend, I mean, don't blame somebody if they got out of this one. This one's not going sideways, you know, pretty good breakdown after just a tickle of new highs. That's the worst case scenario, when they tickle the new highs by a penny and then reverse on us. I hate those. But I want to get into this one because this is extremely important. Now, this is hideous, but if you're looking at this, it was obviously negative 3.25 earnings. This thing had earnings. So it also triggered very early and then went sideways. But if you're in something like this, you have got to keep an eye. You've got to keep one eye on this. If you're a swing trader, the number one predator that you're watching out for in the skies always is going to be, when is the next earnings date? Because once you go into earnings and you have a position, you're a gambler. It doesn't matter what the earnings numbers come out at, it just matters what happens the next day as the market reacts to it. Sometimes it doesn't react the way you might expect it to. So my point is,
especially if it's a mattress maker. No.
Yeah, sleep number of 0. So my point is, if you're in this thing and you're looking at it and you're like, oh shit, earnings are coming up in 2 days, I can't risk this. You'd definitely be happy by managing your risk and getting out ahead of time, watching all the other people take that loss. All right, so let's clear these out because we've got some new ideas here. Sticking with the theme of 7, that seems to kind of work. I've already gone through and I popped them into my liked symbols down here, so I'll just start with them one by one. The first one, sorted by change from their intraday here, is EIX, and I believe this one came from the 50-day pullback to the 50. So staying in concert with the SNPS pullback to the 20, here's a nice move. And how'd you like to be the person that chased up here, only at the close, only to see it reverse 4 days on you? And we would call this the second mouse gets the cheese. I love that little tick down there at the bottom, a little doji right on the 50-day moving average. It also held back here. So we're going to mark up today's high for any follow through, be a continuation for like a trend pullback. So let's see what we got there. 83, so we go 84. Call this one second mouse gets the cheese. 50 SMA pullback. Scan. There's one. Next on the list, hey, IWM. See, I told you we'd come back and talk about this. So if in fact this thing is the lagger, and if in fact this thing does get into gear, let's participate. Is there a levered ETF for the IWM, Andy? I don't know. I'm sure somebody out there might.
Sure there is. They got them for everything.
That aside, we would use our underlying ETF as the trigger. And my contention is going to be, Andy, if it breaks through these levels right here, if it breaks through these levels, it's probably getting a head start to come up and test this level. Therefore, we're going to use these levels right here. TO, I think you're right. Thank you. God, we didn't.
TNA, yeah.
God, we knew that.
I was looking it up right when he
knew that,
was
Andy.
in there. Yeah.
All right, so forget marking up TNA, mark up the IWM, because the 3 times ETF, those are like funhouse mirrors. The numbers never really quite jibe. So use this. We use 157. No, I'm sorry. The high 158.17 is where we're going to go. And I will put that in there. Consider using TAN.
No, TNA.
What am I talking about? Thank you. TNA. TNA, that's funny. using TITSNA for sorry, I know. Consider using TNA as a vehicle for leverage, additional leverage. All right, there's the markup notes on that one. Copart, really nice looking chart. Coming back to close to all-time highs. I didn't really catch that the first time, but still, it's a head start happening. And this one was taken from Bull Flag, which is one of Andy's scans. So I like this Bull Flag it was coming out of. So we'll go ahead and mark up, I think, what is that? 95 high and 99. Okay, so we're going to 66. And watch out for recent highs in history as resistance.
Did you mark that one up last week?
Copart? No.
Okay.
I don't think so.
Okay.
Pretty sure I didn't.
Just looked familiar, but no.
That's what a lot of charts have been looking like.
Yeah, that's true.
All right, who's next? AMC, the theaters. Hey, look at this. Another possible second mouse gets the cheese. Everybody that bought this breakout here all of a sudden suffered a nasty 3-day pullback. Let's take a look at the intraday. And, yep, wouldn't you know it? Where did the washout occur, guys? It occurred in the first 15, 30-minute candles. So we got ourselves another little washout bounce here, right at the 50-day moving average. Now, very similar to the synopsis setup. So we'll go 1533. Another second mouse gets cheese. Question mark, of course, because we don't know. All right, 3 more here. PCG. Again, here's a perfect example of the day-and-a-half trade. Look at that big day-and-a-half follow through, and then the short-term traders start to jump in and take their profits. Get a nice 3 days of pullback here, and looks like it might be trying to hold that momentum line. And looking back here, it's had its issues, but it's definitely trying to dig itself out. I like the way it moved higher, and I can definitely make a case for it here. But it's going to have to go above today's highs. 2179.
Is that the one that got hit by the Southern California fires?
You're right, it is.
Okay.
Yeah, Pacific Gas and Electric, exactly. News stock, so watch price action. And here, as promised, was the internet broker. Remember, we looked at our sector earlier and thought that the IAI sector didn't look bad, the broker-dealer. So Ameritrade fits that bill. Look at this beautiful 1, 2, 3, 4, 5, 6, 7 days of sideways action after a tiny gap up as the 10-period moving average held yesterday and also held today. It's really starting to force the issue. I like this one. You know, it's not in a perfect uptrend, but it seems like it's trying to break out of this congestion level here. Now, the only question is, I guess we got to use this high back here. It's only a few cents higher, just to make sure we'll do that correctly. 54.58. And then iRobot. iRobot is the one that just keeps popping up at the top of my comp rating, and there's just too many people still short this thing. It's near all-time highs again. Let's go and quickly take a look at the weekly or monthly chart, excuse me. iRobot is just blasting off to all-time highs again. But the whole point of this particular
Wait, look at their earnings.
Here. What's that?
Be careful with the earnings. Was that today? Was that this afternoon?
Oh shit, that was today.
Yeah.
They're done. Look at that. They're down here.
Yep.
They're down here.
Yep.
Yikes. Yeah. So I didn't grab the earnings on that one. I'd usually catch these when we do them, so we caught it, thankfully. So we only have 6 we're working with here this week. But again, from last week, remember, there was one that snuck in there from last week. I highlighted that before I deleted it. It said, you know, you got to pay attention. If you're in a swing trade, you better know when earnings are. So there we go. There are 6 ideas. Let me go ahead and share these out. We do have 5 minutes or so. If somebody wants us to look at some charts, we can do that. Copy all and put in the chat and paste. 6 alerts. So for those who are not aware, you can copy and save that link and into your cloud. And when you open it, it will add those price alerts to your price alert features, to the ones you already have. And then when they trigger at the same time for everybody. All right, so Hal wants to look at, yeah, Don, you're right, iRobot, no. So much for the little sweepers that cats like to ride on, huh? SMAR. Not bad, I like it. I mean, Imagine this was probably an earnings back here. I don't know for sure. I'm guessing this would be earnings. So it gapped up to 48, almost 49 bucks. Anybody that bought that has just been an absolute pain since then. Long slog of a pullback and riding that 50-day moving average. Really, I like this. What I would do, hey, shit, I'm just triggered. PCG. Let's go back and reset that. That's a bad tick, I bet you.
Oh, it has to be.
Yes, it's a stupid bad tick. We're going to reset that. You guys will have to do that on your end. But I'm going to do this. I'm going to rip and then pull it back down. There we go. See, you can do that with the user interface. You don't have to type things sometimes. Getting back to Hal's stock, I like. And I was going to just, oops, I need to get rid of this. There we go. That makes more sense. The high over here, shoot, I got to retype it. The high back here was stop at PCG.
They can fix it on their own.
Too. That said from above. I didn't like that. Let's delete this. Let's create a new PCG alert. A little bit higher. Stay. If it does it again, I'm going to quit. So back to Hal's stock, 41.51. I'd be lighting up 41.51 on nailed it. Use your price alerts just like that. I assume you're probably already in it since you asked about it, but it would be nice to have that price alert go off tomorrow just to confirm that you're in a good trade. Hal.
Did you say you would be lighting up?
What's that? I said if the alert lights up tomorrow on the open, then that would just, if you're already in it, then the alert lighting up just
I got you.
Confirms that you're.
I kind of like that term. I'd be lighting up.
The alert lighting up, light the candle. It just confirms that Hal's in a possible good trade there if it does jump tomorrow. Plump. Somebody's asking, is that? No. Pump.
I think.
Not the best name for a stock, but Petro Holding, oil and gas. Okay, well, this has been a great trend to ride. I don't like the candle today, quite honestly. Big blow off top, reversal midday. Don't want to see that. You could have a little bit of trouble there on that one. You also asked about JYNT. Also probably
Joint Corp.
Office of Chiropractors. Low volume. Yeah, I mean.
Obviously strong.
Interesting. It's probably due for
Could
a bit of a pullback there. Look at that.
Topping wicks.
Yeah, day and a half. Two people asked, oh, Derek asked, so BGY, so we'll do BGY. Dividend trust. Price action's fine. Looks fine to me. I mean, beautiful move higher. You hate to be the guy who bought the close this day, only to sit back and watch everybody else get it on sale down here at levels that would make sense. I don't think that's bad at all. It's trying to clear. It'd be nice to get it back above this moving average up here so you have them all fanned out perfectly. All right, two more. Q2, and he's long, he says, which is always nice to know. Oh, so long at 72.42. Well, I'm going to be honest with you, Paul. We talked to the last couple of stocks about not wanting to be the guy who bought after a big move, and we've also talked about a day and a half or 2 days. Stocks go forward 3 steps and back 2 steps. I'd be a little concerned that you might have bought a little late here, but I see what you're looking at. I see that you're looking at this breakout right here, and there's nothing wrong with that. I would love to see some more movement. The volume is nice. The volume today could help you get some more upside movement tomorrow. The fact that it closed above these levels is also nice. I just always like it when it happens right underneath it and then breaks out, rather than 2 strong days of movement getting to that level and then what happens. But yeah. I'm not saying it's going to reverse. I'm saying there's a possibility to keep a close eye on it. If it follows through tomorrow, great. There are definitely reasons why it could, because it's breaking out and got good volume. But you know, stocks don't throw up 4 or 5 green candles very often, and at least big movement candles anyway.
However, I do like the almost a 2.5 month channel that it's been in, so you got that working for you.
Sure. Yeah. I'll mark that up. All right, so the last one before we bring Scott in, Jeff is asking about STNE. Looks like, I'm guessing earnings. No, we had some bad news. We had a gap down. Earnings are coming up in 13 days, but it's retreating down here. You know, I'm sure you know what the bad news is, Jeff. And whatever the bad news is, it's taking 3 or 4 days to wring out the procrastinators. Whenever a stock has bad earnings or bad news like this, I hate to be coming in and buying on the first or second down day. It's really nice to wait for the bad news to really squeeze itself out before it turns back up. So I would wait for a reversal bar either on this one, or if tomorrow it even goes a little bit lower. You know, we need some sort of a reversal bar before the signal is clear, but it looks like it's getting to that level. 3 days can sometimes do the trick, and a little spinning doji down there can also do the trick. And we can see that it tried to break down below that low and test that low and didn't last very long. People jumped back in. So it could be ready for a bounce. I would just keep an eye on the prior day's candle if it can take it out. And that's it. So unless Andy wants to add anything else, we'll bring in Scott.
All good.
All right, let's bring in Mr. Scott.
Hey, thank you. A couple items on the way out. There's a podcast we release most Fridays, so you can catch it if you search for Trade Ideas Podcast in your favorite podcatcher and add it as a subscription. There's also some good back issues with guests, too, you can scroll through and find. There's an ebook that Steve and Andy both contributed chapters to, and it has 5 strategies, 5 chapters, each one with a strategy and how to succeed in a post-VTFD market. Just go to trade-ideas.com/ebook and add that to your trader toolbox by getting the download link, saving the PDF, checking it out. April Holly is a code, all caps, that will save you 15% off the first month or year of any Trade Ideas subscription. Also for upgrades, if you decide you want to upgrade from standard to premium, go ahead and do that, save some cash. We have Steve Gomez is on Twitter at TodayTrader, and the regular Trade Ideas account is at Trade Ideas, and facebookpro.com/Trade Ideas Pro is the page on Facebook to follow and like our stuff. We'll have a recording up later on tonight or tomorrow. Thanks, Andy. Thank you, Steve. Thanks, everyone. Have a good one.
See you next time.
Thanks, everybody. I'll see you Thursday.